So we're going to go in a deeper dive and sort of talk about the lines of coverage and why they're important. And obviously, not every nonprofit's going to need exactly this, but this should apply generally to most. So first line of coverage, you're all probably very familiar with general liability. This is most regularly what we're being asked to place. It's required by most contracts and grant funding organizations. I would say most commonly 1 mil, 2 mil limit usually does carry the day, but we do offer lower limits, but I would say that would definitely protect them in most instances. One thing that I like to point out and make sure that you're aware of, so nonprofits may be different from, let's just say, a Main Street market or mercantile sort of shop. They are going to have operations all over the place. A lot of times, many nonprofits don't even own or lease a building. So when placing coverage, one thing you want to pay attention to is that you have broad location coverage, or more specifically, there isn't a premises restriction. USLI, for example, it's very few instances where we are going to restrict coverage. And what you would have to look for in the list of endorsements is it's the L685, and that would be the premises limitation endorsement. If that's in place, there's probably some off-premise activity we're concerned about. But generally, again, most of the time, we want to offer a broad location coverage because we recognize most nonprofits are going to operate wherever they can operate. So that's, again, important that you have a specialty carrier for that. Higher non-owned auto. I would say every nonprofit has this exposure. What's usually misunderstood about higher non-owned auto is that this is a third-party coverage and it is not for physical damage. Higher non-owned auto is really covering the liability out of someone driving on behalf, a volunteer or an employee driving on behalf of the organization. So maybe they are running to the bank and dropping off some new donations. Maybe they're driving someone to a doctor's appointment, but they're using their own personal auto. You know, that's where this would come into play. And if they maybe injure somebody on the road, another car with people in it, or hitting someone in a crosswalk, that's the liability that this is addressing. That injury to that person in the crosswalk or those other passengers in another car is not covering our employee or volunteer who's driving, and it's not covering that employee or volunteer's car. So that's the typical placement for higher non-owned auto. Event liability, as we mentioned before, super critical because every nonprofit holds events. I highly recommend looking for coverage where that is either automatically contemplated or can be contemplated within the general liability coverage. And the reason why is because what will happen, undoubtedly, is you get coverage in place, and then months down the road, the nonprofit decides to hold a special event. And then everything is happening at breakneck pace, and they need the coverage within 15 minutes because they're at the venue and they can't get in. So I'm sure you're all familiar with that phone call at like 4:30 on Friday. So if you can get your annual coverage in place ahead of time, get blanket coverage in effect, most of the time you're not going to have to worry about that phone call. You can just point to that annual policy and say, there is coverage for your special events. So that kind of comes to how it's typically handled. There's really kind of two ways. One would be standalone coverage. And sometimes that's very appropriate, maybe for a larger, more unique event. I know USLI, on a standalone basis, we can write an event up to 20,000 attendees. So that's pretty large. Now, when we're handling on a blanket basis, it's a bit more limited in the sense that we'll do blanket coverage for all events up to 2,500 attendees, which when you think in the case of a small not-for-profit, that's probably most of what they're going to be doing. But it's in one step, yes, two questions, and you can add that coverage onto the policy. So again, that to me is the preferred route because it reduces gaps in the long run. It also doesn't make you have to fill out an application every single time they need event coverage. Liquor liability is the next line of coverage. It's also pretty common to not-for-profits. That coverage is available on a host or a commercial basis. Now, host coverage is different from commercial, and it's a common question we get. Host really just means that this organization, this not-for-profit, is not in the business of selling, manufacturing, distributing the liquor. So take, for example, a Chamber of Commerce. If they have a meeting and they just have wine and beer available to anybody attending the meeting, that's a host exposure because the organization's not responsible. They are not charging for that beer or wine. Now, if that Chamber of Commerce has a special event and they're hosting a booth where they're selling the beer to people coming up, now they've gone into entering the business of selling alcohol, and that becomes a commercial exposure. Now, again, we can address that exposure, whether it's on a host basis or on a commercial liquor basis. The commercial liquor basis will just maybe drive an additional $100 charge. But that's kind of the main distinction is, are they in the business? And the last thing I'd say about that is that with nonprofits that can be unique in the sense that they may sell tickets to the event, and for that ticket, you may get 2 free drinks. That now kind of crosses them also over into that commercial liability exposure for liquor. So again, we're able to do that on a blanket basis with USLI. So moving on, we have some specialized coverage. We talked a little bit about abuse and molestation. That is really important for any not-for-profit who's working with a vulnerable sort of population. So I would argue that's probably most not-for-profits. If they're providing counseling to abused victims, if they're providing, just after-school programs for youth, perhaps they're working with the elderly or individuals who are developmentally disabled. These are people who don't typically have a strong voice for themselves. And unfortunately, those are the folks that typically are victims of this. So it's very important a not-for-profit protects themselves from these allegations so that they can continue to operate long-term. And obviously, no organization intends for these things to happen, but they unfortunately can. So it's becoming more and more important these days, given that, as I was mentioning earlier, there's now a longer tail that they are responsible for. They can be responsible for activities that took place 50 years ago now at this point. So it's very important that they have the coverage in place, and that they need to look at the limits that they have in place. Now, oftentimes, a sublimit will be completely adequate, but I would say any organization may be working with youth maybe wants up to $1 million limit. Proper risk and loss control is very important, and we can give you some details on what we find to be important. But if you really boiled it down, they need to have good supervisory policies in place. So that means making sure that there's never a situation where there's one-on-one activity with a youth, for example, off-site where there's no one there to supervise. We want to make sure that they have written policies in place. Why they need to be written? Well, it needs to be something that somebody can reference and refer to and sign off that they've reviewed them. And there needs to be regular review. Without those policies, it's kind of like the Wild West, and the people can plead ignorance, but you really need to make sure that they're aware not only of what's not appropriate, but also what they need to do when they find anything that has taken place that is not appropriate. Report it to the police, making sure that then they can start to take care of the individual who's unfortunately maybe suffered in this instance. So there's a lot there, but it's very important that that coverage is in place. It's very important that you work with an insurance company that offers the resources to help you put the right measures in place. Moving along, social service professional, or E&O, is usually also a very important piece of the puzzle, especially if they're providing a professional service. It's very important to have the professional liability and the general liability together because these are covering bodily injury that arise out of either the premises or potentially that professional service. And sometimes it can be very confusing as to which instance caused the injury. So if you have those coverages with two separate carriers, we all know that they're going to point fingers at one another and say that the other entity is responsible for covering it. Put it all together with one carrier, there's no question it's going to be covered. So this is really for their exposure when maybe they're doing a counseling service, they're providing food, they're providing housing. All of these things are very important services that they want to make sure that they're covered for their interest in that professional service. And what it isn't is medical malpractice coverage. Sometimes there's some confusion there. That is a whole other line, a whole other pricing, and this is really meant for non-medical services, this social service professional. Finally, coming on to umbrella, this is really, as we were talking about earlier, driven by these larger verdicts. Most contracts these days do require a $1 million of excess or umbrella, or that 2 mil you see pretty often. We can, again, help with that, whether it's over our own coverage or another carrier. And just be reminded that, this is less and less available these days. So it's important to make sure that you have access. And then property is an area that's usually pretty well understood. Depending upon a not-for-profit, they may or may not actually have property exposures, but they're typically going to be looking for building coverage or contents. They may have equipment that is in transit, so you're going to want to look for inland marine coverage in those instances. But in these days and age, I probably don't need to tell you, there's a lot of restructuring of what carriers are doing with regards to property. There's been changes because of climate change, because of just the economic pressures. There's now increased cost of construction. So many buildings, their valuation is outdated and it needs to be updated. Many values are too low today that where there are a loss, it's not adequate to rebuild the building. So something worth looking at. Also, there's greater concerns these days now with wind and hail and brush fire. All in all, it's just very important to pay attention to the property market. Directors and officers, kind of the final coverage line we'll talk about here. This is really addressing the wrongful acts of the board and the decisions that they're making. Things to really look for while you're putting this coverage into place is, volunteers, they should be defined as insured. If the coverage form is not broad enough to do that, it's not good enough for a not-for-profit. You want a broad insuring agreement. So that's really defining what the DNO is and isn't. For example, we are defining the wrongful acts of the directors and officers, and then very limited in the sense of what's excluded. So it's very important to make sure that it's not just an endorsement to a GL policy, that it is actually a form and it has its own limit. Also, other important coverage features, you want to look for duty to defend wording. This really puts the responsibility on the insurance carrier as opposed to not-for-profit that maybe has to then go mount their own defense and then ask for reimbursement. You want a policy that will provide that defense right out of the gate and pay for it. And so, other things that we point out, our coverage form is really driven to help the individual directors and officers, which obviously are the decision makers who are putting it in place. So we have $1 million Side A coverage, and in conjunction with this lifetime occurrence reporting provision, I'd like to cover the two of them together. With the Side A coverage, what that really represents is that if an individual is named as an individual in a claim, and you have the worst case scenario, which is that the nonprofit is out of money, the insurance policy has been exhausted, limits have been exhausted. It's an extremely large claim, but there's still an action against that individual director or officer. Our policy will provide an additional $1 million limit for that individual. And that's included for no additional charge. So that way there is the assured protection. They will be covered in the event of the worst day possible. We have the lifetime occurrence reporting provision, which protects them if the future board were to go bare, and it will still cover that individual for that individual's decisions they made while on the board. It won't cover the entity if there's no longer coverage in place, but it will still cover that individual. So it's like a lifetime tail. And EPL, I'll jump to that real quick, because that's also a poorly understood area. And typically nonprofits don't have a lot of employees. They may not have any. But there are a lot of claims that we see that fit that employment practices side. So what you're getting with that probably most importantly is the third-party discrimination or harassment. And that would address if any third party that they're interacting with, any third party, alleges that they discriminated or harassed them, this would respond. So it's very important, again, that whatever the case may be, that there's a very broad definition of what's covered and what isn't.